Welcome guys, welcome to another episode of Funds Ki Baat ICICIdirect के साथ. Today we have Mr. Nilesh Shah with us, the man who needs no introduction and one of the most popular fund managers, and I guess every Gen Z to someone who's in his 50s, late 60s knows him. Nilesh sir is the head of Kotak AMC. He is also the head of AMFI and a part of Prime Minister's Economic Advisory Council. It's an absolute pleasure to host you, sir. Welcome to our show, Funds Ki Baat.
Thank you. It's always my pleasure to come back to my alma mater. I started my career in ISEC and learned everything there, so it's my pleasure.
Absolutely. So, sir, before we start and dive into our conversation about the markets and everything, can we just have a quick introduction about your own journey? How did you start, and is that what you wanted to do? Always wanted to be in the equity side. So, can you just elaborate your journey to our viewers?
So my journey is series of accidents and some good luck. I was a gold medalist chartered accountant, went to join a manufacturing company, and the person who recruited me was kind enough to say that I should try my luck in financial services. By stroke of luck, I came into ICICI. They had a merchant banking division. I had no idea what merchant banking was, but they gave me an opportunity. One day, I was going down in lift at 163 Backbay Reclamation Building. Ahead of me were my bosses, and who wanted to send someone to Singapore for learning FX market. I had no idea what FX was, but Singapore was interesting. I grabbed that opportunity, and by the time we landed from 5th floor to ground floor, I was off to Singapore. When I came back, FX license came into ICICI, not in ICICI Securities. So choice was either go to ICICI or do something else in ICICI Securities. Started doing debt market. In my days of debt market, all the experienced people were either in jail thanks to 92 scam or they had retired. We were all, inexperienced people trying to learn the tricks of the trade. From 97 to 04, I was running Templeton's fixed income portfolio. We had a great run. But by 2004, we realized that fixed income bull run is coming to an end. I needed to shift to something else. I needed both debt and equity as investment. Templeton had great equity team, so I had to look outside. And again, my alma mater, ICICI, came to rescue. They kept faith in me, even though I was a debt manager, and gave me both debt and equity. Over the years, I learned the tricks of trade in equity market. It's all about common sense rather than, Excel sheet and lots of technical analysis. And God has been kind. Through series of accidents, I have reached where I am today.
Very, very interesting, sir. So welcome from my side. So a very interesting observation. You mentioned 2003 was when you felt the debt market may not have a great time. Probably you thought interest rate would rise, some of those things. So makes me think that as investors, people think of cycles just for the investment. You thought it for your career also, which I feel is very, very lesser discussed, but it's a great thought. Say like how very few people think are they in a great industry. And probably that's a great thought. So one question I want to ask you is, so recently I saw the number that your mid-cap fund has crossed $2.5 billion in AUM. That's a huge, purely in mid-cap, and the overall AUM is much bigger. The entire domestic institution space has come up in a big way in the last, say, 6-7 years, and even more so after COVID. So earlier they used to see the market would swing in the way where FIIs swing. But very interesting thing that I feel has happened in the last 1 year is markets went up despite FIs selling and FIs are buying now. So can you explain this entire cycle of what happened on the domestic side in the last 4 or 5 years and what has driven it so well?
So in mutual fund industry, you always have something called J-curve or hockey stick. For 20, 30, 40 years, you have to keep on working hard and establish your brand, establish the trust and confidence. And then investors just take off. I think from early 90s till 2015-16, mutual fund industry kept on building trust and confidence. Regulator put the guardrails. Fund managers delivered fantastic outperformance. The trust and confidence was built through consistent experience. It's not that we didn't get jerk in between. In 2000, telecom media technology bubble, there was lots of losses for investors. 2008 subprime crisis, again there were losses. 2013 taper tantrum, there were losses. But people were able to see that we as fund manager were trying to do our best and also try to protect their money. Over a period of time, this hard work of all the mutual fund managers, regulators, and distributors came together to build confidence. Now, when a parent is giving advice to their kids when they are starting their career, beta ek SIP kar lena, beti ek SIP kar lena. We have become part and parcel of everyone's life. There are houses being built because of SIP. There are daughters' education being done because of SIP. There is capital being given to son for his business thanks to SIP. As this experience starts going around, I think confidence of domestic investors in Indian equity market comes through. Finally, it's all about rising tide of India. People are investing in India growth story via mutual fund. If there's no rising tide in India, why will people invest in equity? I think, there was a very famous dialogue in a OTT serial, Kabhi Kabhi Lagta Hai Apuni Bhagwan Hai. In market today, I want to restate that Kabhi Kabhi Lagta Hai Bhagwan Indian Hai. We had problems of terrorism. Now Pakistan has dug such a deep hole that we have to worry less about it. Till December 22, we were worried about rupee and trade deficit. Jan, Feb, March quarter, services exports zoomed up, imports came down, balance of payment deficit came at $1 billion, reserves are back at $596 billion. We were worried about oil touching 100 thanks to Russia, Ukraine, thanks to Saudi Arabia cutting production. Today oil is 75, 80. We were worried about inflation. It remained above 6% RBI's target range for a long period of time. Today, despite tomato prices, inflation has come below RBI's target range. We were worried about growth. In March 23, growth came ahead of investors' expectation. We were worried about geopolitics. For the first time, I am seeing that India is buying cheaper crude oil from Russia and jet technology from America and France. If all these things is not divinity, what else will explain India growth story?
Wow. Wow, I'll take some time to consume that. That's a brilliant thought, sir.
Very well summed up.
One follow-up thought on that. So now, I am also active on Twitter, and I see Twitter as both a source of sentiment check, because बहुत अच्छा source है. There's a constant discussion on DI versus FI, and I have my own views. I'll tell you my views. I feel FIs may have a macro lens more than DIs, but DIs have the pulse because they are domestic. So they have. So question again is, do DIs have an edge? In what ways DIs have an edge over FIs? If you could explain.
So one, DII and FPI are not competitor. If share price goes up, all of us benefit. If governance standards improve, it benefits FPI as much as DII. Now, when we talk about FPI, FII, they are not a homogeneous set. They are heterogeneous set. There are certain FPIs which are using quantitative technology. I think they have an edge over domestic investors because they are using fairly advanced tools. We have a gap to cover. If you compare FPI, which are doing top-down analysis to invest, their research team is sitting outside, compared to DII, whose research team is in India, undoubtedly we have an edge. We know our markets far better. We know our country far better. And we are connected well within our ecosystem to create that edge on research. The gap is narrow, but nonetheless, gap persists. I think each one plays on their strength. There are many FPIs which have a great track record. There are many DIIs which have a great track record. If people play on their strength and fundamentals, I think by and large in India, they win. As I mentioned, India is a rising tide. It will lift every boat sooner or later. You have to ensure that you are not in a boat where there is a hole. If there is a hole in the boat, that boat will not get lifted, it will sink. Many FPIs, many DIIs sometimes make the mistake of investing in poorly governed company. They ignore fundamentals, they get carried away by their greed to generate performance and end up backing a company which is poorly governed. As long as we avoid this mistake of backing poorly governed companies, I think DII and FPI both have space in Indian market. They have their certain advantages, which we are trying to replicate. We have our certain advantages, which they are trying to copy.
This reminds me of something which I remember 2-3 years back. You had said that I would want to see a promoter of a company, either he's on the page 3 page or whether he's working. That was your differentiation of picking up the government. Yeah, I remember. Sir, there's one question because we are talking about the Indian macros. And since the pandemic, like post the pandemic, you were the advocate of China plus one story. And I still remember you had tweeted that one nation has given vaccine to the world and one has given the virus. So could you please elaborate on the China plus one story and how can we, like, what are the benefits and things in store for India?
So in the 1980s, India and China were similar in per capita GDP. Today, they are 6 times ahead of us. They are ahead of us because they became manufacturer to the world. We did become services to the world, but manufacturing is a very, very large industry. They build infrastructure. They push their labor to work hard. They short-circuited the approval process, streamlined the approval process. And more importantly, they also copied IPRs or, did theft of IPRs to create their own industry. Now the Western world is recognizing that they are over-dependent on China. China is grabbing advantages in manufacturing and creating a kind of monopoly situation. There was a time when 60% of China's exports were driven by multinational companies operating out of China. Today, that ratio has fallen down to about 35%. Clearly, all these multinational companies went into China, gave their IPR, and Chinese learned the tricks and started manufacturing things at a cheaper rate. Now, globally, there is a movement that we need to reduce dependence on China. If tomorrow China invades Taiwan, all the global companies will have to live very, very quickly. There will be embargo on supply from China, and which is where China plus one has become a common strategy. Now, there are countries from Mexico to Vietnam to Bangladesh to India, which is trying to grab China plus one opportunity. Many of our competitors have better infrastructure, faster approval process, more productive labor, faster land acquisition, but none of them have as big a market as we have. None of those countries have 1.42 billion customers. We have to go and grab this opportunity. Samsung came to India long before they had heard of Vietnam. Today, their turnover in Vietnam is 5 times more than what is there in India. And Vietnam is 1/11th the size of India. You can imagine how Vietnam laid a red carpet and created $65 billion giant in their country. We were content with what Samsung was doing, but we didn't really lay a red carpet for them. We have to ensure that Samsungs of the world continue to operate in India. They operate in a fair basis. They are given fair treatment, and it creates a win-win for us where they make India export hub. and also access domestic market. If we play our card well, India will become manufacturer as well as service provider to the world. That is the China plus one opportunity for us.
Got it, sir. Great insight. Um, Nilesh, sir, so the question I want to jump into now is on the market. Markets have made new highs. They are now comfortably trading, like Nifty is trading above 19,000. Mid cap index had already breached before Nifty the highs of the previous high. And even small cap is kind of catching up now. There was a gap in valuation on small cap, but even that is getting catching up now. So how do you see asset allocation cycle changing between, say, fund houses on the sizes? But I'll tell you why I'm asking this. I saw interesting June data that in terms of the mutual fund net flows, small cap saw more than 5,000 crores in this month of June, 5,400 crores. And if I do a matter of a fraction of the net overall flows, it came to be 2/3. And I was very interested and very surprised. So I thought, who better than you to ask you this question that is there a shift of flows happening? Is the market thinking large cap is probably overly valued and there is pockets of value on maybe mid and small? What is happening?
So actually, it's exactly opposite. The small and mid caps have shown great performance since March 2020. Even in this year, this financial year from April, small and mid caps have delivered double the return of large cap. And valuation wise today, mid caps are trading at same valuation as large cap, and small caps are just little further. It will be fair to say that large caps are still trading around their historical valuation, but small and mid cap are above their historical valuation. And this past performance is driving investors to invest in small and mid cap fund. From our side, we are telling investors that this market, you need to invest with longer term horizon. There are event risks ahead of us, from US Fed pivot to election 2024. The valuations of small and mid cap is above historical average. Better invest via regular investment. In your portfolio, keep some dry powder so that in case there is correction due to any event, you have ability to average. If you are leveraged in this market, it is time to take out leverage and book profit and close position. If you are overweight equity, it is time to take profit and create some cash so that it can come handy in case there is correction. We don't know when markets will correct, but we do know that event risks are ahead and they can potentially cause correction. While we remain bullish long-term India, the discipline of asset allocation is absolutely necessary.
Guys, just want the to audience, anyone viewing this, please go back and listen to the last 3-4 minutes. Very, very important. I would say the crux comes with a lot of experience, decades of experience. So very, very important part. Over to you, Gaurav.
Yeah, and absolutely, because with regards to the asset allocation, because people tend to get confused at all time and where to allocate their funds at this level. Sir, my next question is around the most top sector recently has been the IT sector. With the emergence of OpenAI, ChatGPT, and we saw IT correcting in the first half of from January 2022. And recently we are seeing IT stocks moving up. On this Friday, we saw IT index gaining by more than 4%. So do you see that IT's correction is done? The stocks have come to their valuation, and is it time to invest in Indian IT? And also your thoughts on Indian IT versus US IT, because even Nasdaq has started hitting fresh 52-week high going ahead.
So on the IT sector, Gaurav, there is a bit of uncertainty. Even the results declared so far and commentary given does not clear air. It actually adds to confusion. In the near term, there is worry about demand or growth. Over medium term, there is worry about adoption of regenerative AI, which may end up replacing certain work. Clearly, AI is a wave. If you are riding the wave, you will probably survive and have fun. But if you go below the wave, then you are in trouble. Market has discounted a lot of this uncertainty into prices, and hence valuations have come down for IT stocks. However, it needs a catalyst so that prices can bottom and prices can start moving up. That catalyst is the clarity about the future. How are companies adopting to changed environment through artificial intelligence? What kind of growth rate one can achieve? I am sure AI will replace some of the primary code writing jobs. However, to monitor AI doing the right thing, there will be high-end skills required. Indian companies can provide that. Some of the pioneers of AI are also talking about destructive capability of AI. We have seen sci-fi movies where artificial intelligence tried to eliminate mankind. Can that become reality? If yes, there will be a lot of work to ensure that AI does not become destructive. Again, there will be a role to be played by Indian IT companies. Put all these things together, I think IT is bottoming out from a price point of view, but it needs a catalyst about future growth, about future projection or future trajectory before investor can go long on it. If you are an investor in IT fund, please continue your SIP. It hasn't given good return in last 12, 18 months, but that's the purpose of SIP. Keep on investing when chips are down. If you are an investor wanting to buy into IT sector, try to invest over next 6 to 8 months at every level. Hopefully you will find the bottom and some catalyst will emerge over next 2-3 quarters, giving direction about IT stocks.
I think that is the perfect sum up for an IT, someone looking to invest in IT and IT funds. Abhishek, over to you.
No, I think that's a great perspective. I had more thoughts, but in the interest of time, I'll move on. So, if you're okay, I just want to talk about pharma sector, and I'll tell you why. I'll state some data which are facts. We Indian IT, Indian pharma is the second largest in volume, but 14th largest by value in the world. We have the second largest number of US FDA compliance manufacturing facilities. Basically, outside of US, India is the pharma most compliant country. We are the vaccine center of the world. We are the largest supplier of vaccine. Despite all of that, one very interesting stat is the combined profitability, profit pool, annual profit of Indian pharma is the same as TCS. Now, when we think of this in unison, it makes very interesting case on discussion on the future of Indian pharma. And when I'm thinking of vaccine, I think some of these things are becoming more like common. People are more aware of vaccine and even diseases, lifestyle diseases. People are health conscious. What is your thought on Indian pharma for the decade? Like the big picture on pharma from you.
So, Abhishek, as you mentioned, India is pharma provider to the world at a competitive medicine, at competitive rates. 45% of medicines consumed by Americans by volume is made in India. But the pocket share of American for pharma spend, we just have 10% share. So we give 45% of volume at 10% of pocket share. 1/3 of doctors in US and UK are made in India. Today, the way Western world is laying red carpet for Indian nurses and medical professionals, these numbers are only going to go up. And the most important thing is cost. A root canal requires about 6 months waiting period in UK for NHS. And if you want to go to private sector, you still have to wait for 2 months with about £1,500 cost. A root canal in India will be probably worth 10,000-12,000 rupees.
Yeah.
The world is aging. They will need Medicare. It's unfunded. And they can't continue to spend money at current level as more and more people join in. They'll have to lower the cost of healthcare. where will that lowering of cost come from? It's going to come from India. We'll have best of the doctors, best of the nurses, best of the hospitals, best of the medical equipments, and yet the cheapest delivery system. Over next 10, 15, 20 years, will India see emergence of a healthcare sector, just like IT sector, which will have on-site and off-site delivery models, which will have telemedicines, which is digital, and which will have hospital, which will be physical. There will be medical tourism. And on this, you add yoga and Ayurveda, which is preventive Medicare. On this, you add elder care system, which is post-retirement elder care. And a comprehensive package is possible from India. My feeling is that Indian pharma, India healthcare system will evolve just like IT sector, because the world needs cheaper and affordable healthcare. And only India has ability to provide medical professionals, medicines, and cheaper or affordable healthcare delivery. Now, in this super cycle, will there be ups and downs? Undoubtedly, yes. There will be ups and downs. What will be the biggest risk in this hypothesis? The only risk is that could research create artificial heart, kidney, liver? If that happens, then there's no need for medicine. You just replace your heart, kidney, and liver. Unless until something like that happens, I think Indian pharma system, Indian healthcare system will be on the same growth path like Indian IT industry.
Wow. So just a follow-up question, which I had heard you talk about in one of the earlier talks on Multiply. So you mentioned that Indians living in US, they are making per capita 50 to 55,000, and this was 1 year back number you said. In India, we talk a lot about per capita. Okay, we are $2,000 per capita. And a lot of investment thesis in the market is revolving around that. As India progresses from $2,000 per capita to $5,000 per capita consumption, things will actually grow in a big way. But I want to ask in this way. I'll tell you what, I don't believe in the one India average, because I think, sir, with your experience, you know that we are not one country. We are a very diverse set of people. But still want to understand from you, what is this gap? Did those people who went to US and are earning $55,000 versus our average being $2,000, is it a function of just the resources being available in terms of intellectual capital? Like, what is the reason for this divide?
I think it's not just intelligence. Yes, of course, a lot of IIT, IIM professionals went abroad. But at the same time, a lot of Patels from Africa, India also went there, and they were not highly educated. They got an environment where entrepreneurship was respected. They got an environment where hard work was rewarded. If you look at the Indian American community, intelligence obviously has played a role, but their hard work and the entrepreneurial respect of American ecosystem has resulted into they becoming most successful migrant in the US. We unfortunately didn't respect our research or our entrepreneurs. There's this story of Dr. 𝘯𝘭𝘭. He had a test tube baby in Kolkata just after world's first test tube baby was created. And instead of appreciating the work done within the limited means, the fraternity hounded him and drove him to suicide. We would have never known about Dr. 𝘯𝘭𝘭, but for the fact that his work was kept preserved. And when, someone else created test tube baby, he shared those research. And the second recipient, who was hailed as a creator of test tube baby, was kind enough to appreciate the work done by Dr. 𝘯𝘭𝘭 and highlighted how we treated our researcher, our scientists unfairly. This is where India lacks. We don't respect our entrepreneurs. We think they are evil. Our rules, regulations, processes put burden on them. My favorite quote is that modern day entrepreneur is like Abhimanyu. Abhimanyu, by his choice, went into Chakravyuh. And while he was fighting all the Kauravas at one go, he had a hope that his uncles and relatives are trying to come to his rescue. It didn't happen, and unfortunately, he died. The Indian entrepreneur is born in Chakravyuh. He doesn't enter there, he's born there. And of course, he has to fight market forces, the Kauravas, from Chinese competition to raw material volatility to infrastructure constraints. But unfortunately, he has to also fight Pandavas, the rules, the regulations, the burden of compliance. Even in Mahabharata, Abhimanyu could not win against Kaurav. Pandavas were trying to help him. How will in modern India Abhimanyu win if Kauravas and Pandavas both try to kill him? We need to support our Abhimanyu so that he can break this Chakravyuh and make India rich, prosperous, and inclusive.
Absolutely, sir. And I think just add one more thing that says the mentality, like we need to encourage entrepreneurs rather than discouraging them from doing something new. That is also one thing that comes to the mind. Sir, one question is very, very common, and it's there with every investor's mind, someone who's an 18-year-old to a 30-year-old, that suppose if I want to get into the market, what should be an balanced portfolio? Because balance between equity and debt, also some of commodities, because you talk about gold as well. So someone who's listening to us, what should be his ideal portfolio mix? So coming from you would be the best advice for them.
So I will recommend every investor to adopt two ways. One is to outsource asset allocation to a professional. It could be, let's say, via ICICI Securities distribution model, where you will analyze a person's risk profile, investment objective, and then prescribe a plan. Or if you believe that I can outsource this to fund manager, you can go and invest in asset allocation funds. They divide between debt, equity, and precious metal like gold and silver. The other way to follow asset allocation is to do it yourself, where you divide between debt, equity, gold, depending upon your risk appetite and investment objective. One thing which you have to ensure, that in the cheaper market, you have to add to your positions. In an expensive market, you have to book your profit. Most people end up doing asset allocation in a rear view mirror. They buy when markets are expensive because past performance looks very, very good. And they sell when markets are cheaper because past performance looks very, very poor.
Right.
If you're doing it yourself, do remember to look through front glass, not through rear view mirror. Buy when markets are cheap and sell when markets are expensive. If you follow this simple principle, I think eventually it will work out for you.
Actually, this was my next question to ask you. Like a lot of people have a focus on buying, adding, averaging. But there is a very important aspect in the market is about selling, because if you do not sell at the right time, you may end up in a big mess. And you being a successful fund manager and coming from a very big fund house, what is your, when do you decide to sell something, sir? And what is the, how much focus for you as a fund manager is on the selling aspect of any script or a share?
So when you know you have entered a wrong lane, you have to take a U-turn before accident occur. We end up selling a company when we believe they have committed misgovernance. For us, staying with a good promoter who will not cheat minority shareholder is absolutely important. The second, you will also sell out when you believe there is another opportunity which is better on a risk-adjusted basis. So if you are going in a car at 30 kilometers and you are happy with it, but you believe there is a next car which can go at 50 kilometers, you don't mind switching. The third decision for selling is based on technical factors like liquidity, like portfolio weightages in relations to benchmark index. But by and large, we are buying companies for a longer period of time. Our portfolio turnover ratios are somewhere around 10-12% a year, which means I continue to hold my stocks for a long period of time.
Get it. So these are the main factors. Sir, again, a follow-up question to this, because there is a data which says that even the portfolio, people who are holding mutual funds do not hold it for more than 3 years. Like the average holding period is somewhere between 2 years and 3 years. So if anyone, suppose like I'm a 30-year-old right now and I want to bet on the market, what would be your advice to someone who's in his 30s or a 25-year-old Nilesh Shah that I am investing in mutual funds? What should be the ideal holding period? Because someone will say hold it till you're 60, but we need funds for our day-to-day activities as well. Or someone who wants to buy a car or a house. So would you just help us out with that advice?
To every young person, my recommendation will be, please follow the principle of income minus savings equal to expenses. Most people believe income minus expenses is equal to savings, but that's not correct. You must save something. Income minus savings should be your expenditure budget. Second, the savings has to be invested. If you save a lot of money and keep it in currency notes at home, that's not investment. If you put money in fixed deposits, again, that's not investment, that's parking. Now, when you are investing with an objective. Maybe it's your vacation, maybe it's buying of car or a flat, maybe it's retirement. Based on the bucket of your investment objective, you have to pick up appropriate instruments. Short term is debt, longer term is equity. And you will withdraw money only when you want to spend for the objective for which you have saved money. If I am keeping some money for retirement, then I won't use that to pay for my vacation. Medical emergency is a separate thing. Jaan hai to jahan hai. But I wouldn't spend on vacation from my retirement kitty. I will save for vacation separately. By following this process, you will know what corpus you have to hold for a longer period of time and what money you can spend. So go as per your investment objective and don't mix them unless until there is medical emergency.
That's right. I think the perfect answer, because many say that there's no one fit all solution, but I think income minus saving is equal to expense would be the perfect, like what you call the bottom line for every investor in this market. Abhishek, over to you.
Very interesting, sir. We are now coming towards the end of the discussion, and there's a very interesting observation which everyone, I think you also have, is while the SIP flows has improved, like from say days of 3,000 crore a month 5 years, 6 years back to 5x, almost 5x, 15,000 crore a month, great shift. But at the same time, there's an equal or more shift in the futures and options segment. Like we are ICICI Securities, if we have the numbers, more than 95% of the market volumes are driven by options. Even within futures and options, the shift is more on options. So what is like your view on what is happening? And if someone who's 25, who's started his career, I think most of them start career with trading more than thinking of investing. What is your view on this space and any advice?
So to me, for ordinary investors, there's no future in futures and options. And like in tobacco, we write cigarette smoking is injurious to your health. In FNO, we should write for ordinary investors, trading is injurious to your financial health. I'm very glad that now SEBI has prescribed the same, where before you trade, the disclosure comes that 89% of investors have lost money while trading in FNO. Trading is a double-edged sword. It is useful only in the hands of people who are master of this technology. Today, it's a competition between man and machine. There are algos which are continuously trading in market. An ordinary investor doesn't stand a chance to win against algo. So my recommendation to investors, to traders, speculators, please be very, very careful about FNO. My experience suggests that 90% of people actually end up losing money. There's no future for you in futures and options.
That's a very important advice, because post 2020, since that work from home thing happened and everybody had time and money, and everything is available at a click of a button right now, everyone went into futures and option exploring that we may make 10x, 12x, and that doesn't happen. That only happens in casino, and it's
So Gaurav bhai, there is a saying that jhan lobhya hoy tyan dutara bhukhe na mare. Wherever there is greed, the thieves won't die of hunger. Today, human nature is such that everyone wants to become rich quickly, which is why you have seen people lending money in, Ponzi schemes, which promises star and moon and then runs away with your principal. People traded in cryptos without realizing what they were. They went into FNO, reading telegram channels of speculators and supposedly market gurus. They went into gaming. They went into lottery. All these things give you hopes, but rarely delivers. Whereas investment is like Birbal Ki Khichdi. Pakne mein time lagta hai, but deliver jarur hota hai. As someone mentioned Warren Buffett, Warren, why is there no other Warren Buffett? There's so much written about you that what you do is not a secret at all. Is there any secret sauce about you which is not written? Warren Buffett replied, well, everything what I do is in public domain. But I make money in a very, very slow manner. People don't have patience to trade, to invest like Warren Buffett. They want instant gratification. And which is where greedy people end up losing their principle.
So, can you I have a philosophical and a psychological consumer psychology kind of a view. I think so. What is also happening is, so this greed cycle has always been there. If you even go to 1992, you know that this gets the better of people, right? And I completely agreed what you were saying, that it is only shifting from, say, a crypto scam kind of coins to even NFTs. People were thinking imaginary pictures are worth buying and everything. But the question in my mind is, why is this happening at so much scale, and why India is prone so much? Probably, I think because we are transitioning from being, we are at the end of the day, if not a very poor, but we are a middle income country, or very clearly. But our aspiration, because of the entire access of the entire global things via internet, the aspirations are very global. And even in youngsters, the influence is very strong on travel. And if I just go and travel and show my picture of Darjeeling, but if I go and show a picture of me standing at Times Square, that is where my reel gets likes. So basically what is also happening is the access of the internet and the entire influence of only the aspirational thing which 1% of the people attain. There's a rush to anyhow make money quicker. And I think Indian mind, like every human mind, thinks of, doesn't understand risk the same way they think of greed. Greed is more powerful than risk. And that is where all this mishap happens. And then people actually realize that they have lost few years. I know so many cases of people losing 5-10 years of their savings in being overtly aggressive on FNO. I also believe that options are not necessarily bad instruments. It's what you make of them. I know very smart people who use options to hedge risk on their portfolios and even do strategies By the way, we at ICICI we do a series called Options Ki Baat, wherein we tend to believe that the instrument in itself is not wrong if you understand and if you can have the patience to learn the right covered strategies to which don't give you unlimited risk. You know what risk you are taking, but the 99% of the market goes into unlimited risk and reward kind of a thing, which are naked calls and puts. So we are trying to do our bit on that. Over to you, Gaurav.
No, I just wanted just one last question, sir, on this part that you said about the so-called Telegram gurus, and we are seeing a lot of people get lured because of them. And there has been cases where people have lent money to like unregistered advisors and lost their fortune because we hear these stories every day. Sir, any message to our retail investors on this from your end? Because this will be a better, like no better advice for them than yours.
So there is a saying which says that Utavare amba na pake. And even my dog is confirming that in her voice, saying that Nileshbhai, I can also speak on this. Why do you have to repeat everything? There's no better virtue than patience. We have been told that if you want good mango, you have to plant mango seed 12 years before and wait. I haven't seen anyone going to the temple and complaining to Bhagwan that why are you making me wait 12 years? You are God. You can do magic overnight. No one complains to God for 12 years to get good mangoes. Then how can you expect miracles in market? What is equity? It is nothing but reflection of the corporate business value. Yes. Can you build business overnight? The Tatas, the Birlas, they have built businesses over hundreds of years. So think of this as a business partnership. Get the best entrepreneur. Stock market is the only way through which I can partner with Tatas, Birlas, Ambanis, Adanis. Where in the world a small person like me can partner with the best entrepreneur? That's only possible through stock market. Absolutely. We have to take advantage of that. There is a Swiss watch Patek Philippe, which says that you don't own Patek Philippe, you merely pass it on to next generation. Same thing is applicable in stock market. You are custodian for your future generation. If you invest with that view, I'm sure you'll become long-term investor. And फिर Birbal Ki Khichdi pakne lagegi.
Absolutely. And this is like the best advice for anyone who's there out there who's trapped in this furus, what the term which is said. Sir, we are on the last, one last question before I let you go. Because
So just I'm completely agreeing and just adding one thought. कि खिचड़ी पकेगी and I think we cannot say कि कितनी जल्दी पकेगी, but हमको ये मालूम है इंडिया में पकेगी because we know what is happening in this country, and that is so much of a comforting factor for me also to think, say I'm in 30s. I know that if I don't make big mistakes, I will be doing very well in the next 10 years. I just have to not make the big mistakes. And that kind of assurance, very few countries and very few markets can deliver that. If you don't make the wrong big mistakes and you just do the right things, you'll do very well. That is something that I have told myself. And I just, on this note, I thought I'll say my view. So last question over to you is, like Nileshbhai, as you're more fondly known in more senior circles, what is Nileshbhai's interest outside market, and what, like, is it reading, is it watching, is it traveling, is it your dog, family? What keeps you busy, and can you share anything that you enjoyed in, like, any book, any series?
So I'm just a normal Mumbaikar who enjoys food, who enjoys reading, who enjoys Bollywood and cricket. I'm no different from an ordinary Indian. We are all grateful to God for the opportunity given. There's a poem in Gujarati, Gamtu Mariye to gunje na bhariye, gamta no kariye gulal. If you get something good, you don't put it into your pocket. You spread it like color of Holi, where everyone benefits out of it. God has been kind that it has given me some knowledge about market. which I can communicate to investors in a language they understand. They also have faith or trust on me. Many a times I have gone wrong on market, but people have forgiven and appreciated it. So instead of using my skills for making wealth for myself, I'll rather use those skills to benefit the society. And fortunately, in mutual fund industry today, we have so many such legendary investors. They all could have made far more money investing on their own name, but they used their skill for the benefit of general society. I think that is what Nileshbhai and others are doing and should be doing.
Like a normal Mumbaikar with a humble background has spoken. So I think
Was,
then I'll
like,
just end
begin
this
now.
with one thing is like
Yeah.
Vasudev Kutumbakam is like your main policy, like, and that is how our government and everybody around in India is going through. And we are one family, and it's better to spread our knowledge and make everybody grow rather than only one person growing. It was an absolute pleasure to host you, Nilesh sir, and I would end it by 𝘠𝘪𝘨 because that's what you're known. That's what our seniors have told us. And 𝘠𝘪𝘨 के साथ आपको ऐसी गुफ्तगू होगी. So viewers, if you like this, before ending, Kotak AMC has many listings on our platform. You can definitely go and see. They have listing in fixed income, equity, and thematic investment side as well, if you want to invest in a particular sector. And there is a product of one-click basket available with ICICIdirect. You can choose your own fund and invest through ICICIdirect's platform.
It's a great way to invest in with research, because people tend to buy only those schemes which have performed well in the last 1-3 years. One click brings you that lens of a research lens. I think it's a great product.
Absolutely. Yes. So that's where we take your leave, Nilesh sir. Thank you so much for being a part.
Thank you.
Thank you, sir.
Please note, mutual fund investments are subject to market risk. Read all scheme-related documents carefully.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.